Welcome. We will begin shortly. Thank you for attending the webinar on Credit 101. I hope you find this informative and assisting you in your quest to learn more about credit. Be sure to subscribe to my webinar channel and watch for more webinars. Today's agenda will be about credit scores, understanding hard versus soft inquiries, learning about rate shopping, FICO scores, dispute letters, and other resources. Let's begin. My name is Untitled. I'm licensed in Virginia, Maryland, and D.C. with Keller Williams Realty in Alexandria, Virginia. Having been in real estate for over 15 years, I've seen my share of buyers that have challenging credit, those that want to rebuild credit, and I decided to create a webinar to make it more informative to understand how to rebuild and what credit is all about. So let's talk about credit. Credit, according to Wikipedia's definition, is the trust that allows one party to provide money and resources to another party, wherein the second party does not reimburse the first party immediately, but promises to either repay or return those resources at a later date. So there are several types of credit. There's single payment credit. That would be your utility bills. That's an example. Installment credit. It could be a lot of different installment, like car loans are installment. Revolving credit, retail stores, financial institutions. Having good credit matters because it offers you more job opportunities. It helps with the lower interest rate and insurance rate. So if your car insurance rate is high, it could be because of your credit. Credit report. Now let's talk about what's included in a credit report. So it has your identifying information. It's going to be your name, where you live, public records, which would be if you had any bankruptcies, tax liens, monetary judgments, debts, overdue child support, your credit information. So that's all the creditors that you've had in the past, any collections, and also any inquiries that you may have had. So credit scores. Credit scores can range from 350 to 850. In real estate, there are lenders that will grant loans to buyers with credit scores at 580. Don't be discouraged if you have a low credit score. It's possible to rebuild your credit, as FICO scores only focus on the last 12 to 24 months of payment history. So your credit score is made up of 35% of your payment history, 30% of your outstanding debt, 15% of your length of credit, 10% of new credit, 10% of types of credit. And all these together make up what your credit score is. So hard versus soft inquiry. So a hard, or they otherwise call pull, is an attempt to solicit credit for a loan. So let's say that you went to apply for like a JCPenney's card, or you went to tried to apply for a car loan. That would be considered a hard pull. A soft pull or inquiry would be if a creditor is just looking at your credit. So say if one of your current credit cards wants to issue you some additional credit, they may look at your credit before they give you more additional credit. Your potential employer may check your credit. Your landlord will check your credit. Or also the pre-approved offers will do what's called a soft credit pull. So credits and real estate. So credit is everywhere. Your bank, the stores you shop in, dealerships. Buying a home is much different than buying a car. When you buy a car, you shop around, you test drive cars, and when you see a car you like, you apply and you get the car. In real estate, you get approved for your loan, you shop for a home, and then you buy the house. There are 3 credit bureaus that your lender is going to look at. That is your Experian, Equifax, and TransUnion. And your lender is going to pull what's called a tri-merge credit report, and that's going to merge all three of them together. And they're going to use what's called the middle score, which I'll talk about that in a minute. So a general rule of thumb that you want to target is a 620. Lenders will use your middle score though. Let's say you have a 635 with Experian, a 619 with Equifax, and a 621 with TransUnion. The lender is going to use the TransUnion score at 621 for qualifying you. Credit scores affect the interest rate, APR, rates for homeowners insurance, as well as other things. Many people go out and get credit watching software to see their scores. Scores from these systems are called Vantage scores. They are not the same as what lenders use. The lender is going to use your FICO score. So this gives you kind of a general idea of what your score is, but it's not your current score. So also, before I move to credit rebuilding, as far as inquiries for your rate shopping, the score allows you to rate shop. So when you apply for a mortgage, auto loan, or education loan, you may have one or more hard inquiry. As long as you find a loan within 30 days of those inquiries, it won't affect your score. You have the right to get your credit report annually at annualcreditreport.com. Remember, though, that the scores are not included in that. So, if your credit score is less than 600, you can rebuild it, but it's going to take time. So, start by ordering your 3 credit reports from each credit bureau. You want to review them for errors. If you find errors, create dispute letters. Make sure your dispute letter package has your photo ID, your social security card, proof of address, copies of documentation supporting your dispute, and send copies instead of your originals to the credit bureau. You also can establish good credits by opening a secure credit card from a company like Discover or another bank and use and pay it off each month. So start with something small, start with $500 and use it to pay like your gas in your car, your lunch, or other expenses. And in a year of doing this and maintaining good credit, they'll review your file and they'll give you the $500 back, and then they'll upgrade your card to an unsecured card. It's also necessary that you're going to have to pay off your existing debts. See if you can work out settlements with the companies. With any money that you pay, make sure you get a receipt and a satisfaction letter from the company stating that the debt is paid in full, because you'll need to submit that to the credit bureaus so they can update your file. So you want to be credit smart. Only borrow what you can repay. Pay debts promptly. Notify a creditor if you cannot make payments. Report lost or stolen credit cards promptly. Never give your card number over the phone unless you have initiated the call or you're certain of who the caller is. Review your credit reports yearly. Dispute any inaccurate information. The credit bureau has to investigate information that's incorrect, and it has to be removed if it cannot be proved. Many make payments on time. Keep balances below 50% of the credit line or less. Lenders do like 25% or less. Have a mixture of credit with revolving installments and mortgages. Limit the amount of inquiries you have. Are there any questions at the time? If not, I want to thank you for watching the webinar on Credit 101. I'm Realtor Leaven with Keller Williams Realty.